Okay, a very good evening here on the 30th of January 2014. It's Rishi Patel. The time is 6:38. Just waiting for a couple of other people to join, and now they have, so we're going to kick off pretty much with this evening's agenda. So, I know it was a little bit last minute, so my apologies for that, but I just thought we'd put this together because there were quite a few questions coming through about where to locate certain things in the Dropbox folder, how to use the journal, and then just the strategies and things like that. So obviously what's happening is we are looking at putting this webinar together, and we're doing that for you this evening so you can get a good clear overview as to where we are in the live trading room. So I'm going to kick off in just a moment's time. Bear with me just one moment. Okay, so we've seen the agenda. We're clear about what we're doing. Let's kick things off this evening. So let's start by looking at the transition over to the Google Drive folder. So here's what I want to do. We're going to be using the Google Drive folder as we're going along from this point onwards. So what does that mean? It basically means that we won't have any more confusion with regards to the actual Dropbox folder. I think I was finding some of the times what was happening is that the journal was being duplicated or updated when it shouldn't have been, and so what we've got is a really facility which is going to allow us to just keep a close tab on that journal so that we only have write access to it and everyone has read-only access. That basically means that no one else will be able to make modifications to the journal except for us, so the figures will stay always true and consistent to exactly what's happening in the live room. Okay, so what I want to do at this point is I want to do a tour of the actual Dropbox folder and all of the files so that everyone has understood clearly where everything is located. Let's start by looking at the first folder. So the first folder is the Elite Systems, and that the first folder is called Elite Systems, and that has just just an overview really of the Elite team and their program and what they're working on. So you can have a look at that in your own time. That's not really as relevant for the Live Trade Mentorship members. However, the Elite team do have some crossover with the Live Trade Mentorship as well. So it's important for you to have an understanding. The Elite team, just so you know, is a small team of people who have dedicated themselves to making this a full-time profession, and they're basically going to be the ones that go on with us to trade in the hedge fund structure and have the opportunities on that side. So we expect that to be big this year. Okay, I'm going to move on to the next folder up, which is the LTM tour. Okay, now under the LTM tour, you're going to see that you have a video in that folder, and the video is called LTM tour.mp4. It'll be interesting to watch that. It may be a little bit out of date now, actually, so we're going to update that. We'll probably put this video in its place. It's basically going to give you a tour of the Dropbox folder and its contents, right? So that's what we're going to go over this evening. So that LTM tour, that video will do that for you. The LTM research folder then has some documents inside there which basically we're looking at to use as templates and things like that for our testing. So a lot of them have the journals and things like that for what you want to do your testing on. Some of them will have the swing high and swing low levels and other bits like that. So really journals for the different things. You can take some time out and have a look around in that folder, and you can see the types of strategies that the Elite team are testing. Some of them are in there. And then also I'm going to be giving up some homework in terms of lift-off strategy and testing things and other bits like that. So you really get a good feel for the different types of journals and things that are in there that we're logging. I've got some profiles and things in there. We can probably take some of these out. Some of them not as relevant anymore. But that's the LTM tour folder. Then we have the LTR folder. Okay, now on the LTR folder we have this probably 95% of where you're going to spend your time in the Dropbox. On the LTM journal folder, you can see you have two journals at the moment. You have 2013 and 2014. these are basically the trade journals that we're using. So 2013 trade journal basically contains all of the 2013 trades that were taken arranged by tab. So you can see, first of all, collated results lifetime. That's giving us a strong overview of what's happened over the lifetime of the live trading room. So you can see the results are in there for that one, just there. So you got LTM 2012 results there, you got the LTM 2013 results, and these are the overview results, but the individual trades are all broken down by the actual trade itself, and you can see that those are all contained in this journal just here. So the idea is that if you're even unable to watch a recording from the live trading room, the best thing to do is to go ahead and just have a look at what's been updated in the live trading room journal, and that will be the best and quickest way to put your orders on. So this is split by strategy. So for example, you can see last year on the liftoff we took 17 trades, we took 38 trades dynamic breakout, we took 16 trades price run, and then you can see an overall equity curve of the performance from 2012 up till the end of 2013. And this is how that journal works. So if we go on to the more up-to-date journal, actually, which will be the LTM journal 2014, what you'll see there, when we get that up and running, whoops, here we go. There we go. The LTM journal 2014 is the one that we're currently on. So you can see that that will have the most up-to-date trades on. For what's happening at this point in time. Now, what we're looking at on the journal are the trades that have been taken so far for the year. What we can see pretty much straight away is that there are some different color codes on here. So we have some different color codes. These are basically telling us that we are looking for certain trades, and certain things are happening at these points in time. When a trade is in blue text like this, what's happening in a nutshell is we are seeing that the trade has started on a certain date and finished on a certain date, and we exited the trade and we've made either a profit or a loss, and we're out of that trade and it's void. Maybe not, the void isn't the right word, maybe the better word is it's over, it's been done, and it's closed for a profit or a loss. Now, when the trade is highlighted like this in brown, what it basically means is that the trade is cancelled. So we place the trade as an order to open, as we do with all of our orders that we put on the market. It's an order to open, and what has happened is that we have decided, for whatever reason, that we want to cancel that because it's no longer a valid setup. So we'll mark that in brown so people know that that has been cancelled. Now, trades that are in trades that are in red and bold, like maybe something like this, are normally pending orders to open. Pending orders to open are ones that we've placed perhaps that evening or a few evenings ago that haven't triggered yet, so the market hasn't reached that level in order to trigger us into the trade. So those are pending orders to open. Okay, and so I'll give you an example of a pending order to open. A pending order to open, for example, may be, let's say for example that we're going to place a trade on the dollar Swiss. Let's say we're going to place a trade to open on the dollar Swiss to go short at this price level here. This trade has not triggered yet. So what we're looking for is the price to move lower, trigger us into the trade, and then of course we will be short, for example. That would be a red order in the journal. It will be a pending order to open. It hasn't triggered yet. We're waiting for it to trigger. However, when it does trigger, what we'll do is mark it in green. Okay, we'll mark it in green. So here you can see in green we have the liftoff strategy, which was running along on cable, which has stopped us out for around about the break-even point today. So we're out of that trade for a break-even. So that will now be moved from green into blue in this evening's live trading room. So that's a basic description of the journal and how it works. In a nutshell, so as I already mentioned, trades that are logged in blue like this are orders that have completed. Okay, so we're no longer looking to look at those anymore. They're not really relevant to us. Orders that maybe are in brown, that maybe in this color just here. There we go. Those are orders that have been cancelled. Probably not the right way of spelling cancelled. My apologies, spelling was never my strong point. Orders that are in red are orders that are pending to open. And orders that are in green, which going to look like this, are orders which are live in the market. Okay, so that's basically the breakdown for the different types of color you're going to see on the trade journal, and those are basically telling you those things. So I hope that makes sense. And what I'd like to do at this point is just put myself on mute, really, and just to ask if anyone's got any questions about what I've spoken about so far in terms of the journal and the first of the folders in the live trading room, the LTR and the LTM journals folder. I'm going to put myself on mute, and I'm happy to take any questions at this point. Okay, so it looks like there are no questions at this point in time, so I'm going to carry on. I'm going to save the changes to the journal, and we're going to close that. There we go. Let's move on to the next folder on the actual live trading room. Here's what we're going to do. We're going to look into LTR getting started. Now, LTR getting started is all about getting you up and running. So, there are some useful resources in here. You can click onto these, and what they're going to give you is basically the basic mechanics for how you can use some of the software, especially MetaTrader 4. How you can place orders, and you can look at these. I've made these, and they're still relevant, they're still valid. And to have a look at these YouTube links in your own time. They'll teach you, if you don't know or you're unaware of how to actually put orders and things like that on, you can actually put those orders on. By just watching these videos, it will give you a step-by-step walkthrough, and it's very, very easy. Now, the next one is really, what have we got here? We've got journals. Again, have a look in this folder. It's just got a video. It will walk you through the trade journal, which is what I just went over, and it will give you a heads up on how to use that if you want some more detail. Then you've got setting up MT4 charts. Now in here we have two different folders. We have the MT4 installation folder, and again, if you watch this video, it will show you how to set up your account and how to get MT4 up and running. And we've also got a tutorial on how you can place your first trade and some other bits like that. And on there is, in part of that video with the setting up MT4, you're going to have the agenda that I used for that particular video, so you can see that. Then you've got these MTM strategy profiles. Now, these are pretty useful because you're going to need to drag and drop these and do an installation of these folders into your own personal computers. So the way to do that is just copy the folders. You copy them, and you need to find your installation of MT4 Easy Forex and drop the folders into the profiles for MT4 Easy Forex. If you need help, I'm sure that Larissa won't mind giving you a little assistance setting that up. If you ask her very, very nicely, I'm sure she'll take a little bit of time out to help you get that up and running. And that's that you can do. And that you can do in your own time. So just speak to her, and I'm sure that she will give you a little assistance with that. So that's what we're looking at. Just a little bit distracted because I've just seen a really bad photograph of me put up on Facebook. So apologies for that. Have to get that removed somehow. Right, not to worry. Maybe I'll show you guys at some point actually. But anyway, let's not get distracted. Okay, so these are the profile folders. As I said, you need to be able to drop them into your actual MT4 installation. So happy to kind of walk people through that. That's totally not a problem. So that's the strategy profiles. That's that folder there. Now this folder here, Strategies Explained, this is actually a folder that's all about explaining how the strategies are broken down and how they work. I would spend as much time as possible in this folder because these 3 videos are basically going to give you a heads up on the 3 different strategies that we trade. So before you ask about, what's happening in the live room and it's sort of gone over your head a little bit, I understand a couple of people said that. That's fine. Make sure you watch these videos because we designed them specifically so that it will explain how the strategies work, the concept behind them, and exactly what we want to achieve with them. So please watch these videos. They're very useful, and they'll give you a heads up in this Google Drive folder as to exactly what we're doing. So that's the Strategies Explained folder. Next, we're going to go on to the actual Strategies folder itself. I'm going to leave out this middle folder. I'm going to Strategies folder itself, and on the strategies folder, you can see again we've got the 3 strategies broken down. This time, what we've got 3 folders within each strategy. So we've got the profiles, which will give you the actual profiles for the layouts for the actual strategy. We've got the crib sheet, and the crib sheet is basically the rule set. So again, you need to watch this, and you should read through it in detail. What I would do is maybe print out a copy and look at it as we're going through the actual live trading room. This crib sheet gives us our rules for entry, our rules for our stop loss, and our rules for our exit. And its objective is to make sure that the trades we're taking are nice and consistent. Okay, so that's a very important factor. Nice and consistent is what we're looking for. We're looking for the profiles folder within there as well. Again, these are just profiles for the actual dynamic breakout, and the backtesting results, these are basically the results that we've gotten historically for this particular strategy, giving you the reason why we are trading it. Okay, I'm having a couple of private messages coming through asking me to show you the photograph of me that's been put on Facebook. That's very bad, so I'm a little bit nervous about that. In fact, we'll just quickly get distracted here. This is very, very unprofessional. So, what was I saying? You guys aren't very chatty. It's okay, I guess you're all being really serious and business-like, which is good. Okay, so, that's the LTR folder. So we've covered that in a little bit of detail. So we've gone over the LTM journal folder. We've gone over the strategies folder where the strategies are contained and broken down, explained. And we've got the LTR getting started folder, which contains the video. Okay. So next is the My FX Book Getting Started folder. That's the last one in that LTR folder. And in there, we put an instructional video of how you can use the My FX Book feature, which is online. So My FX Book is basically a fantastic platform which allows you to, on a private link, record accurately all of the trades you're taking. And it's a fantastic way of putting a track record together to present to us, because we're looking for people who can put a track record together so we can trade with them. So this is a great thing to do. Please take some time out to look at that link, and then if you're interested in compiling a track record, we're happy to assist you with that and putting that together. That's not really essential or mandatory, I would say, but if you're looking to achieve and get a consistent track record, it's a good thing to do. That's the LTR folder. Okay, then I'm going to show you the WPS folder. Now, the WPS basically stands for Weekly Planning Session. Now, the Weekly Planning Session folder we don't actually use anymore. What we do is we send out a recording on a Sunday evening or a Monday, where we actually do an entire analysis of the actual market for the week ahead, and we show you on that video all of the key levels. So those levels are all contained on those videos, and what we do is we show you all of those important support resistance levels, and that's contained, say, on a Sunday evening or a Monday. We'll send that email out to you, and it will have all of the information. That's the WPS. And then the Q&A, that's just a document which allows us to, if we're getting lots of questions coming through for the live trading room in advance, we'll normally paste them onto this document, the Q&A, and we will be able to answer those in a strategic and methodological fashion as we're going along. So that's the actual Google Drive folder itself. And as I say, we're transitioning over from Dropbox to Google Drive, so you'll all get in the next coming days an invitation to join the Google Drive folder, so that you can have a heads up on exactly what that's all about. Okay, so that's what we're looking at there on the Google Drive folder. That's the contents of the folder and exactly how to use it. As I say, 85-95% of the time you're going to be in the LTR folder, and that's the place where you can see the journals, and you can understand the strategies by looking at the videos and things like that. So that's where you want to spend the bulk of your time with our folder. And obviously this folder will complement what's happening in the live trading room at 9 p.m. as well. Okay, so that's pretty much what I wanted to cover in terms of Google Drive. So here we are with our agenda. So you can see, really, we've gone over the Google Drive folder. We've gone over the walkthrough as well. What I want to do is just an overview, really, of some of the live trading room strategies that we're using. And I would expect it would be good if you can all interact with me on this section, so we make sure people are getting things. Okay, so here's what we're going to do. Let's minimize all of that, and let's grab this. Okay, so let's go over the different strategies that we're using in the live trading room. The first one is the lift-off strategy. So remember, for the lift-off strategy, we're looking for a couple of key rules. The first is that we are looking for the order of the moving averages. The order of the moving averages that we're looking for are really here the 20 moving average to be above both the 50 and the 100, or the 20 moving average to be below the 50 and the 100. That's what we're looking for just there. What we're also looking for is we're looking for a setup bar. A setup bar is basically a close below the 20 moving average. Okay, in this particular case, for a long opportunity, the setup bar is a close below the 20 moving average. Once we have a setup bar, we look for a confirmation bar, and that's the bar that closes above the 20-day moving average. Now, there are actually a couple of different variations of this lift-off strategy which we may trade from time to time. We may not strictly look for a close above and a close below. There may be occasions where we get things like this happening, where we've had a bar that has opened above the 20 moving average, it's maybe spiked below, and it's closed above. It hasn't opened or closed above the 20 moving average. We could still take a lift-off strategy off of the back of that. It is a variation of lift-off, and if you want to see all of the variations of the different strategies that we use, then you can just click onto the lift-off crib sheet, and inside there you'll see that we've printed all of the different variations of the actual lift-off strategy that we use. Now, there are many different variations. We only teach one variation on the live trading room, on the Trades Basecamp, which is variation 1B, where you get a close below, and then there's a maximum of 10 bars before you get a close above. But there are actually a couple of different variations of the actual strategy itself, so you can read through these and have a look at them. And if you have any questions, then we're happy to go over them with you. Okay, so that's the lift-off strategy for going long. You're looking for a close below followed by a close above on the order of the moving averages. If you were looking for perhaps an opportunity to trade the market to go short, and you may look at something like this, which is dollar Swiss a few months back, where you had the 20 moving average below the 50 and the 100. In this case, you're looking for short opportunities. This time, you're just looking for things the other way around. You're looking for a close above the 20 moving average that you've got just there. And then you're looking for a close below the 20 moving average. And what would happen is you'd place your order to enter the market just there, and you put your stop in above the high just there. Okay, and if that didn't trigger the next day, which this one hasn't, then we would cancel that order, and you'd see that order would appear in brown for the rest of the month to indicate that we had it on, but we didn't take it, it didn't trigger, and it's cancelled. Okay, that's the lift-off strategy. Are there any questions around the lift-off strategy? Okay, there didn't seem to be any questions coming through at all, which is sort of concerning me, because I'm wondering if I'm sitting here talking to myself, or if I have people listening to me, or if the sound is even working, or if I should just go home, really. What do people think? Are we there, and are we alive? Aha. Thank you very much, Ashish. That is a great question. In the journal, will the variations be reflected? And the answer is absolutely yes. We should always be putting in there the variation that we're trading. So if we look under the journal, you can see that my beautiful assistant Larissa has been leading the live trading room over the last couple of days, and she's put in each time where the variations are under the entry reasons. So there you can see that the first lift-off strategy was variation 3A. This was a variation 4A part 1. These were 1As, 1Bs, and that's where the actual the variations are reflected. Okay, so that does that is always reflected in the journal, and that's very important to note. So good question, and thank you for that. So now that I know that the sound is working and there are people actually listening, I shall continue. I'm going to move over to the next strategy up, which wasn't covered in the actual Traders Base Camp. To say it's a little bit beyond the scope of the Traders Base Camp, so we didn't cover it there. It is called the dynamic breakout. Okay, I'm going to explain just one variation of the dynamic breakout, and that variation is basically what we call a variation 4 dynamic breakout, which is a trend continuation breakout. So it is one where we have a breakout of a swing low in a downtrend, or a breakout of a swing high in an uptrend. Let's take the Aussie dollar, as it's the best example, as it keeps setting up different opportunities for us to trade the market. So I'm currently looking at the Aussie dollar, and you can see here from looking at it pretty clearly it is a downward trend. Now, what's good about this currency and why I'm using it as an example is because if you look carefully, you've had pretty much perfect lower lows and lower highs every single time. So what that means for us is that each time it sets one of these patterns up, we put in an entry order on the break of a swing low. So the most recent one that we're in at the moment actually is the entry just there. And you can see that the reason we've taken this trade is because according to the Master of the Markets algorithm, which is this one just here. We actually did have a swing low forming, and so what we do is we put in an entry order where this yellow line is, and we look for a break. And you can see that this next let's actually take this off for the time being so that we can see clearly. So you can see that the last swing low that we had forming was this buyer bar just here, and what we do is to trade this, we put in an entry order on the low of this bar just here. We put in a stop order on the high just there. That's pretty much what we're doing. So that's where we are with this. And all we do is we take trades in the direction of the trend as soon as we get a new swing low forming. So the last trade that we put on the market was this one just here, and you could see we had an entry just here, we had a stop at the top here, and this trade didn't actually trigger for a long period of time, and that trade was just there. It was sitting in the market until one day, boom, suddenly we had been triggered into the trade. Now that particular trade we will have got into the market, and we trail our stop loss every three seller bars for a short trade. So it's a different trailing stop loss to the lift-off strategy where we trail under the moving average. This time what we're looking for is, if this is the first seller bar that's got us into the trade, we look for 1, 2, and then the third seller bar. That high is where we'll place our stop around. So you can see on the next bar it did come against us, and we were stopped out for a very, very small loss of around about 0.2%. I believe actually it was exactly 0.17%. was the loss on there. So remember, we're keeping our losses very small, and that's the idea behind what we're doing. So then as soon as another swing low sets up, which it did, and in fact it set itself up here, the swing low, we've now taken another trade as this bar here has broken and taken us into the trade. So 1 and 2, this is the third seller bar, so we trail a stop loss to the high just here, and that's basically where we are with our trailing stop loss at the top of the bar. We're waiting for now for 3 more seller bars to come into the market, so we're able to go ahead and trail the stop loss again to whatever the highest point is. So that would be the trailing stop loss just there, and if we've got another 3 bars, 1, 2 and 3, again we trail to the high again. Okay, so the stop always is trailed on the third seller bar's high. That's pretty much what we're looking for. So I'll show you again what that looks like. Let's say we've got seller. Let's say we've got a buyer bar in here as well, and then we've got another seller bar. We will find out which one is the third seller bar. We'll trail the stop loss, then we'll look for 3 more SL, and then we'll keep trailing the stop loss until either A, we hit our target, which is a little bit lower down, or B, we hit the trailing stop loss. Okay, so that is the dynamic breakout, and that's a variation for dynamic breakout. There are a couple of different variations of dynamic breakout as well. We won't go over all of them now because it will be totally overwhelming. That is one of the most basic ones, in line with the overall trend. So that's what we look for. We're just looking for, it's very simple, the breaks of those bars in the white and blue boxes. Very, very easy, and we'll trail the stop every 3 seller bars for a short, or every 3 buyer bars for a long. Okay, and again, as always, as with all strategies, we're trading the live room at the moment. We have a 2-to-1 reward risk ratio. So if we're risking 100 pips on the trade, we're looking for a 200 pip target. Okay, that's the key thing to know. Is that clear for everyone? And at this point, once again, I'm going to put myself on mute, and I would love to take some questions around this. I know that maybe it's been causing a little bit of confusion. Okay, good question. So the question is, how do I get the boxes or does that come when I put the files into the profile box? Okay, so the boxes, first of all, will not update themselves very often. So you can see that these, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 boxes have appeared over a period of around about 3.5 months. So they don't come up very often. So when they come up and you're watching the recordings in the live trading room, what I would recommend is simply press Control, grab one of the existing boxes and just drop it over the next bar where we put a new box. So that's going to be the fastest way of you getting them. Otherwise, they are in the profiles folder, and you could take them from there, but you will need to update them on your own charts as you are going along. So that is just so you can monitor where the swing highs and the swing lows are. Okay, the way to monitor where they are is, again, just look at our screens, make sure you you pause or do a freeze frame on our screens, and then you can see exactly where and how the profiles are going to be set up. Okay, so that's to answer that. It's a good question. Is everyone else okay at this point and understanding what we're talking about and happy for us to carry on? Please just say why. Okay, so everyone's happy for us to continue, so I'm going to continue. Okay, so everyone's happy for us to continue, so I am going to continue. And I'm going to move on to the third strategy which we cover in the live room, which we call price run. Now, price run is actually, as I already said, quite a bit to get your head around. It involves trend reversals, and it looks to get into trend reversals as early as possible. That is the idea of a price run setup. So let me explain exactly what this means. Now, what we're looking for are opportunities to trade the market on a reversal. Okay, so let's have a look at the Euro US dollar as an example. So now you can see here the Euro US dollar was for a little while in an uptrend. Okay, and up until this point just here. Then what happened is this swing low was broken by this bar, and that euro dollar then became a downtrend. However, what happened after that is that the price kept climbing. It kept climbing, and it finally broke this last swing high. If the price breaks the last swing high, or we call it LSH, the price breaks the last swing high, we then look for opportunities to trade the market long. However, what happened in this particular, so we look for opportunities to trade the market long. That's pretty much it. So if I'm looking for opportunities to trade the market long, I have a couple of key steps for a price run strategy. The first one is look for a trend reversal, which we've definitely got here. The price has turned, it's clipped the swing high that we specified, and you can see that the price has then soared up and it's come back down. Swing high over here broken, and where we had a downtrend before because of the break of this swing low, we now have a new uptrend. Okay, so now we have a new uptrend. What we can do is actually the second step, which is start to monitor for potential retracements. Now, to monitor for a retracement from this low point here to this high point, what I do is I take what's called a Fibonacci extension, or Fibonacci retracement, sorry, not extension, Fibonacci retracement, and I'll just click and hold and drag over the first point all the way through to the last point. Now, what this Fibonacci retracement tool allows me to do is it allows me to create and have a discounting mechanism understanding. Okay, so I'm now able to understand the mechanics for how much this price is going to be discounted, because look what's happened. We've broken the previous swing high. You see, if we've broken the previous swing high, that means we have an uptrend, and if we have an uptrend, we're looking for trade opportunities to go long. Now here, we're fortunate enough to have a retracement to the 61.8% level. So this price here retraced to 61.8%. Then what happened is the price started to climb, and what we do is once we satisfy the first two criteria, the first one being looking for a break of a swing high in a downward trend, which we had here, the second one being a discounted price of at least 38.2%, and 38.2% actually, let's have a quick look here. The 61.8%, what it's allowed us to do is come back down to this price level just here. Okay, so the fact that we're at that price level is quite key for us. Okay, so 61.8% retracement from the highest point that it reached all the way down to current point. See, once we see a retracement on the daily to either the 38.2%, the 50%, or the 61.8%, what that means for us is that we're then able to see that the price is discounted and that we can look for a potential reversal on a 4-hour. Okay, so let's drill down to 4-hour. You see here, 4-hour has created for us a couple of swing highs just here. So basically what we were looking on the daily, we've now just drilled down to a 4-hour. If I were to draw my Fibonacci retracement from lowest point to highest point again, to make this black, so we're able to see it, you can see that's the 61.8% retracement. But now I've drilled down to a 4-hour. The 4-hour, what it does is it gives me loads and loads of resolution, right? It allows me to see things in a greater level of depth than what I saw on the daily chart. Now you see there are some important swing highs and swing lows just here. And you see these swing highs and swing lows, they basically are our opportunity and our way of looking and seeing what's happening with the market now in the 4-hour on the 4-hour basis. Now what we look for on the price run is we look for a 61.8% pullback or a 38.2% pullback. Then we actually look and drill down and look further for the 4-hour swing high break, because when you get a break of a 4-hour swing high in a downward trend, more than likely there's a good chance the price is going to reverse. So we entered this particular trade after we saw the retracement on the daily on the high of this 4-hour chart. Okay, that's where we entered, and we took that trade, and you can see it triggered us in. It then pulled back and retraced against us a little bit. Our stop was just below the low here, and our target was just above the high up here. It retraced a little bit, moved against us, and then it kind of shot up and it hit our target. And this is where we took a very quick 2% profit. I think in just a matter of 2 days, pretty much. So that's what we were looking for on the price run. You see, the step one, pretty easy. The step one is where we look for a pullback to a moving average. The step two is where we then start to look for the step one is where we start to look for a trend reversal. In fact, I should say, trend reversal is when we see a break of a swing high in a downward trend. So here we have a break of a swing high here in what was already a downward trend. We broke a swing high, so we have an upward trend. And at that point, what happens is we start to look for trend reversals. So here we've had a break. So in a nutshell, we had an upward trend on this Euro US dollar. Everyone can see that upward trend on that Euro US dollar. That's what we had. And then we've got a swing low that's being broken just here. That now gives us officially a downward trend. As soon as that happens, we officially have a downward trend. Break of a swing low here gives us a downward trend. Okay, that's pretty much what we're looking for. We're looking for that downward trend. And now what we start to get are a pullback, and we're moving higher, and then in a downward trend we're getting a break of the last swing high. As soon as that happens, we then officially have an upward trend. But now what's happening is we're getting a pullback. So the price is retracing. So this is almost like this. This is the best analogy that I can think of. Say, for example, that you knew that the price of towels was going to be going up from £1 to £10. And you knew that information because you saw this break of this swing high in the price of towels. You saw it here. And the price started to pull back. So the towels actually dropped from £10 to £5 to £2. And now, over here, the price of towels are just £1. So what you'd do with the information and knowledge that you know that this is going to climb later on down the line, you would buy as many towels as you can get. As soon as the price shoots up, you'd sell all your towels back for the £10 value that you knew that you were going to get, and you'd make a £9 profit per towel you bought. Okay, so that's pretty much how the price run works, because what we're looking at on the daily chart to start with is certainly a break of a swing high here in a downward trend. The break of the swing high tells us, so this break of this last swing high on this bar, this tells us straight away that later on down the line there's a very strong chance the price is going to be climbing before it falls. We've got that first piece of information. The second piece of information that we get is retracement. So the price starts to fall. And as the price starts to fall, we get a pullback to a Fibonacci level. Now, once we get the pullback to the Fibonacci level, that's an even better signal for us, because now what happens is we're getting our discounted towels. Now, these towels drop from £10 to £4 to £3 to £2, finally to £1. We buy, let's say we buy 1,000 towels at the bottom over here. They shoot up in value because we expect them to, because we've been given that signal already, and then we sell our towels back for £10 per towel, and we can bank £9 times 1,000 towels, £9,000 profit in that short space of time. So that's the best example I can give on the price run. And the way we decide the entry is by looking at a 4-hour chart. Now, I completely appreciate that the price run is a tricky strategy to totally get your head around. So what I would do is I would look for a couple of examples and look through the trade journal. Look through our trade journal for the exact trades that we've taken on the price run strategy, see the date that we've got in and the time on the 4-hour chart, and have a look as to why we've got in. And then in coaching, if you're doing some coaching, let's say with Larissa or one of our other coaches, you could actually have an opportunity to ask why we're taking the setups that we're taking. So happy to do that, okay? Because I appreciate this is a tricky strategy to get your head around, but we could explain it maybe a little bit better on one-on-one. We'll get a little bit more interaction. But in essence, that is the price run strategy. 3 steps. The first one is on the daily. We're looking for a trend reversal. The second one is on the daily. We look for a Fibonacci retracement to 38.2. 50% or 61.8%. And the third signal is the 4-hour chart. When we see a break of a swing high, that's when we look to enter the market to go long, because we feel that our signal is reliable enough to give us a heads up that the price is going to be shooting up. Okay, so that is the price run strategy. What I'm going to do is at this stage I'm going to put myself on mute. I'm expecting you all to type something into your chat boxes or to unmute your microphones and interact with me a little bit, so that we can kind of clear up. Okay, a couple of good questions which I would like to answer. The first one is, so is all this stuff in detail on the videos? And the answer is yes. You want to look through those videos and it will give you, again, a couple more examples than what I've gone over in terms of the different strategies. So yes, that stuff is there, and that's already been put into detail, so that that's understandable, that you want to get your head around that. So yes, have a look through those videos, and once you've done all of that, please book in a little bit of time in terms of coaching. Now, the thing is, we're happy to assist you with this, and the coaching is actually a complementary part of what we do. The one-on-one coaching is actually, we don't charge anything additionally for that. certainly for advanced coaching. So Larissa and one or two of the others who have brought themselves up to a certain standard in terms of their trading are offering to give coaching, and that works on a fair usage policy. So you can book some time in with them. I can send out an email with Larissa's email address and Skype ID, and if you contact her, she'll be happy to make a time for you to speak. Obviously, if you are booking coaching, give lots of notice. If you can't make a session, give lots of notice. In the past, people have abused this and sort of cancelled last minute or not given notice and things like that. What we do in that situation, very simple, we stop offering you free coaching because it's free. It's not to be abused. There is obviously, we need to have respect for people's time. The other thing is, obviously you have access to that, but please don't walk into a coaching session saying what is price run. At least have a core understanding of what we've gone over. Have some good quality questions ready, because again, if you're just walking in saying, how do I do this, we're not going to be able to work with you effectively. Okay, so you need to put in an element of self-effort by actually going through the video material, by actually going through the crib sheets, by doing your best to work out some examples, show us some examples of strategy setups you think are correct, and we can work with you from there. So that's what we can do in terms of coaching. I'm happy to shoot out an email with the details for how you can book on to some coaching with Larissa there, and she's very clued up in terms of all free strategies. She's regularly leading the live room as well. Okay, so that's what we are there. If you're on the Live Trade Mentorship Advanced program, then as opposed to just the normal Live Trade Mentorship program, then you have some coaching booked in, elite coaching sessions, and those elite coaching sessions will be either with myself or Tiru. Okay, so that's where we are, and that's pretty much my overview done for the evening. At this stage, I'm happy to answer any other questions just before I close. Okay, thank you for your comments. I will be leading the live trading room this evening, so if you would like to join at 9 PM, we'll do our normal analysis of the market and our 15-minute session followed by Q&A. Happy to have you there at 9. Otherwise, have a lovely evening, and I look forward to catching up with you all very soon on another Master of the Market session. Until the next time, keep trading like a master. Take care, bye for now.